I know. Where have I been? I've got a lot of explaining to do. Let me just start off by saying that I've been down quite a rabbit hole of day trading, working on myself, working on my trading, refining my trading plan, understanding truly how to do this, not just faking my way through it or trying to take what others are doing, but truly diving into what I've been trying to do in the markets and really putting forth the work to make them able to consistently take profits from the markets. So it got me thinking. At first, I do want to say thank you to everyone that reached out to me. I had so many comments about, are you doing okay? Is everything fine? What's happening with the channel? And the channel is living on. I want to thank everyone for helping the channel to cross 5,000 subscribers. I think we're at 5,100 as of today. But what I wanted to do was to officially thank you all, but then to jump into 3 key elements that I think everyone needs to have a successful trading plan. 3 elements that will take your trading from sort of that chop back and forth, questioning yourself week in and week out, to, oh, I've achieved a new level. Now I'm sort of sustainable. I'm floating above the masses of confusion and indecision and uncertainness. And I want to get into that in today's video. So I'm promising you 3 key elements for your trading plan. And if you've been chopping around and you're winning and you're losing and you're winning and you're losing and you feel like you're just wasting your time, stick around. This video's for you. If you're new to the channel, subscribe, join the 5,100 subscribers, and let's grow. Next benchmark, 10,000. Let's get there. And in addition to that, if you don't mind, go ahead and hit that like button and turn on your notifications, because yes, I'm back after my adventure and I'm going to be putting out more content now. I want to kind of continue that next growth. We've had a pullback and now we're going to continue more growth. So join the team. Let's dive into this. Okay, so number 1, this is the most basic yet one of the most important key elements, but I'm going to kind of build on each one. So the first one's going to be like the lightest and we're going to build into it to number 3. So stick around for the whole video. So number 1, we're going to talk about why you have to define your risk value. If you don't know what a risk value is, drop down in the comments right now and tell me you don't know what it is, but take a guess at it. What is a risk value in your trading? What it is it's also known as an R value. What this is this is the exact dollar amount that you're willing to risk or lose on every single trade. So nobody who is starting out, in my opinion, should be trading stocks and not knowing how much they're willing to lose. Because if a stock goes against you, which is very common, you might enter, buy some shares, the price might go down, and you might be down $150. Well, is $150 okay with you? Or is $200 okay? Or is $50 too much? You have to know this ahead of time. And I've had some really good questions on the channel where people have said to me, Jimmy, how do I figure out how many shares to buy based on the risk value? Well, lucky enough, we're going to get into that right now. What you want to do is take your stop loss. So when you're going to enter a trade, we always calculate and figure out your stop loss. What is the level, a price level, where you will exit the trade if it goes against you to that point? What you do is you take your risk value. Let's say your risk value is $100. You divide your risk value, 100, by your stop loss. Let's say your stop loss is 20 cents. 100 divided by 20 cents equals your number of shares. So if you buy or short this number of shares and you hold firm your hard stop loss of 20 cents, you can't lose more than $100. Now this works with any stock and any risk value. So if your risk value is $50 and you want to trade Google and your stop loss is $25, then you know you can only buy 2 shares or short 2 shares of Google in order to meet that risk level. Because if you lose $2, you're going to lose 50. And if 50 was your risk unit, that's the most you're willing to lose, then you won't lose more than 50. So that is number 1 on my list. And that's something that I've defined for myself, and I'm not changing that. It's going to stick there for a while. And if I maintain that, what that does is that adds a layer of consistency over all your trades. What you don't want to do is have a risk or R value of, say, $100 one day, and then maybe the next day you feel a little more uncertain, so you back it down to $50. And then the next day you go to $150. You want to maintain consistency because you're betting on that you're going to try to win 50% of your trades, 55%, 60%. So you need to be losing a consistent amount so that you can then establish a consistent gain in each trade. And that way the probabilities are going to play in your favor. Just like a casino does on the blackjack table. They need an edge. They need a large sample size of players and dollars, and over time, the probabilities are going to play out in their favor because they're maintaining certain loss and rewards by using their edge. That's leading me into the second key element for your trading plan, and that is just simply knowing your target. So this gets complicated. I get a lot of questions about this as well. People don't understand that if you are always changing your target, but you're never changing your loss, then you're going to be sort of jerky and it's going to be inconsistent, and you're going to have maybe drawdowns that are greater than they would be if you maintain consistency both on the stop loss, the risk amount, and the target. So what I mean is, let's say $100 is your risk unit. That's your R value. And let's say your target is 2R. Twice that. So if you lose a trade, you're going to lose $100. If you win on the trade, you're going to make $200. So let's say you only win 5 out of 10 times. 5 losses would be 5R. 5 wins at 2R each will be 10. So overall, with 5 wins and 5 losses, if you don't change anything, you'll end up with 5R gain, which is excellent, because then it's just a game of scaling. Then you just increase your R value to $200, $300, $400, $1,000, $1,500, and you can see how this can just exponentially grow. And if you want a perfect example of this, what I always have people do, and I learned this from live traders, is get a coin, say my risk value is $100, flip that coin, and every time it lands on heads, pay yourself $200. Every time it lands on tails, take $100 away. Do that 100 times. After each coin flip, write down how much you've made. So heads, write down 200. Next one, say it's tails, subtract 100 from your 200 and write 100. And keep track of how much you're up or how much you're down. And I think you'll surprise yourself at the end of 100 flips where you are when you're paying yourself 2 to every 1 loss. It's pretty amazing. Now, it doesn't mean that your R value can't be higher or lower and that your target can't be higher and lower. It's just pick them and keep them consistent. And the target value has to always be greater than the R value. I prefer 2 to 1. Some people like to go 1.5 to 1. Some people go 1.3 to 1. It's just got to be greater than your losses, because let's say it's less. Say you take a trade off quick because you get nervous. Your loss is 1R, $100, and let's say you gain $98 and you're getting excited and you take the trade off. You made $98. The very next trade you lose, you're now down $2. You lost 100 after you made 98. But if you would have held and gone to 2R and then lost 1, you'd still be up 1R. So you can see how these probabilities work out. It's like being a casino. You're just making sure that you have an edge that's allowing you to profit more than you lose. And finally, number 3, the third key element of a trading plan, and this is the one where I'm going to jump into the charts and show you an example, is when to take profit. Trade management. You have to know when you're willing or allowing yourself to take profit. And this example is going to kind of crack you up, because I've suffered from this, and this is one of the reasons why I went down this rabbit hole. Was I would get up on a trade, be really excited about it, and the trade would start to stall. And I'd get nervous and I'd take the trade off, and then the trade would go very high. It would continue to run without me, and I was leaving so much money on the table. So I needed to really buckle down and create a rule that says you cannot take profit until the trade hits 2R. I don't care if it's a penny away. I don't care if it's a nickel away. You cannot touch this trade until it hits 2R. And I tell you what, this morning I had a great experience. I have some screenshots, and I want to show you in Thinkorswim what it looks like. but it stalled and held and held and held, and I thought the old me would take this off. The new me flipped to another chart and forgot about it, and it hit target. So it was a successful trade for 2R for me. So I want to jump into that and show you that example right now. Okay, so here's the trade I wanted to show you. I was promised you an example, and here it is. This is Uber. This is this morning. It's on the 2-minute chart, and if you follow my cursor here, you can see this pin bar right here. That was what I was watching for an entry, for a break of that high. And so I got the break, I got triggered in. You can see this is my target. I had 588 shares. You can see this is my target at 2R, and this is my stop loss. So my stop loss was 17 cents, and my take profit 2R target was 34 cents, twice what my R value was. So as it broke, it started to kind of chop around in here, and this is a screenshot of it, but it pushed up, and then on the very next one, I'm going to go switch over here to the next progression. So it pushed up higher, so I'm watching my target. Now I'm starting to see profit, I'm starting to get excited. I'm thinking, okay, the old me would start to think, listen, you've got, $120 right now, let's start thinking about taking it off. But the key is you can't take it off early, because if I lose the next trade, then I'm barely up on the day. So I've got to get that 2R. I have to get twice what my risk level is. So from here, I'm going to shift over to the third one. Let me find that one. And now this is the funniest screenshot of them all, because it pushed up into this level, opened up the new candle, and then right now you can imagine I'm thinking, okay, I have to get to 317, and I'm at like 315 right in here. So a lot of times in the past I would just take it off. I'd say close enough, take it off. And this opened up and dipped red. You can see that little tail down here. It dipped red for a second, and I thought, oh, here we go, we're going lower. What's going to happen? Is it going to pull all the way back? And it held here. It held 316, and I was just kind of counting and waiting, and I thought, oh no, it's not going to go. It's just holding and holding and holding. So what I decided to do was flip to another chart and move on and not even think about this thing. And then I heard the ding, and here it is. You can see my target's gone because it got hit. 317 was the target. You can see price right here at 321, and then go ahead and gave me my 2R. 208.80 was what it ended up being, with a little bit of slippage in my favor. But that was the Uber trade, and that was sort of a big milestone for me, is holding my plan, not taking my profits early, because my rules, the key element being know when you're allowed to take profit. For my trading plan, I do not take profit before 2R. So I could not touch this trade until it hit 2R, and it did. And yes, in the future, for those of you who are thinking this, I am going to see trades go 1 penny below my target and then come back and stop me out. That is going to happen. I know that's going to happen. It's really happened in the past as well. I've had that experience. So I know it's out there, and if it does, it is what it is, and we'll move on to the next trade. So I hope this video was helpful. I hope you guys gained something, and I hope you can apply one of these or all of these 3 key elements to your trading. And if you have questions, email me at takingtrades@gmail.com, or just hit me up with a comment below. It'll really help the channel. And again, hit that like button, turn on those notifications, and we'll see you next time.